We will now begin our first panel session of the event, which focuses on how Guardrails and Sankalp are building trust, reinforcing transparency, and ensuring responsible microfinance across India. This session will be moderated by Shri Shuparno Pathak, Senior Economic Journalist and Columnist. May I request the moderator and panelists to take their seats on stage as we call upon your names. May I please call upon Shri G.G. Mamin, Executive Director and CEO Sa-Dhan, to please come on stage. May I please call Shri Shuparno Pathak to kindly come on stage, sir. Calling Shri Chandrasekhar Ghosh, former founder and former MD and CEO of Bandhan Bank, back on the stage for the panel. Shri Aditya Chatterjee, MD and CEO Equifax. Shri Balbir Singh, Convener SLBC and GM Punjab National Bank. Shri Sibu K.A., National Head Inclusive Banking, ESAF Small Finance Bank. Mr. Lakshman Soy, DGM NABARD. And Shri Jaideep Ghosh, Managing Director of Jagran Microfinance Limited. Requesting Ghosh sir to kindly come back on stage for the panel discussion, and Mr. Aditya Chatterjee to kindly come back on stage for the panel discussion. Lakshman Soy, DGM NABARD. Over to you, Pathak sir.
When I came here, I was under the impression that I would be greeting you with a good morning. But looking at the watch, I see that it's time for saying good afternoon. So, when Mr. Nambiar contacted me, he asked me to come to the auditorium on time. I said 5 minutes to 11 and not a minute more. I was here at exactly 5 minutes to 11 at the reception. So when I came up to the stage, I looked at my watch. That was the time for me to depart. Be that as it may, that's what we are. We are Indians. We are sloppy, yet we are efficient. So globally, if you go to any management institute as a teacher, these would be the question that you would be facing. I will not get into that now, but the point number 2, which is more relevant, is that for the last 3 days, this organization has been setting guardrails for me, what I can say and what I cannot. And I also presume that I am here as a moderator mainly because of the fact that my abrasiveness, my tendency to talk out of turn will somewhat be capped. So, talking about guardrails, I still remember an SROs. Someone, Mr. Chatterjee of Fairfax, perhaps said that there was a 360-degree representation here. But I think the most important aspect of the entire microfinance movement, the beneficiaries, there is no representative here. So any talk about guardrails will somehow be, for want of a better word, be constrained by their absence, because most of us will be talking about ourselves and will be beating our drums. Mr. Chandrasekhar Ghosh being the sole exception, perhaps. I presume that the panelists here will also reflect and indulge in some kind of self-criticism. Now, who should I start with? I mean, over the last 3 days, I have also seen the panel churning. So I'm totally at a loss who is who and what is what. And don't laugh. You know, that's one of the most difficult things that a moderator faces. So as I see, I mean, I guess the overall structure of the panel remains the same. We have SROs, whatever that may mean. I still remember in 1984-85 when the concept of SRO first started floating around. I was also a trainee reporter at Business Standard. People were wondering what SRO was. So, and SRO started with an association of advertisement agencies, and later on RBI intervened and SROs came into being. But self-regulatory organizations have meaning only when they have the bite also. I mean, you can sort of put up the rails, but at the same time, you'll have to ensure that whoever negotiates those staircases are also safe properly, and then they don't skid. And also someone else doesn't benefit from those. So without much ado, and we are all, I'm sure that we are also waiting for the lunch, I will start absolutely from home. I mean, whoever wants to start. So it's a toss.
So let me start because I'll set the context in terms of data and numbers, and then individual organizations can comment on this. So when the situation started worsening, say 18 months, 24 months, so of course there was a lot of factors where what people said is causing this in the MFI sector, but one of the major things that came out was the multi-lender analysis. So then the bureaus also started doing a lot of studies because frankly before that no bureau ever looked into a multi-lender scenario. We also did not. That time I remember at its peak, right? A two-lender analysis used to come out at 60-65%, which basically means that only 60 to 65% of the borrowers have one or two lenders. The rest have more than two. That 60-65 currently stands close to 90. Right? So of course, and we are also seeing the sector, green shoots, doing better, a good next 12 months there. So I think once the SROs called it out, got the guardrails in place, and I think most importantly implemented the guardrails, and as a bureau in our discussions with various organizations, everybody is very, very serious. In fact, they tell us that their internal guardrails are a notch above an SRO. If an SRO says 3 lenders, they go by 2. So I think data says that it has been an immense success. Data says that 2 lenders is at more than 90%. Very, very negligible 4 or 5 lenders, maybe 1-2%. And data says that it is stabilizing and only going towards the betterment and hence helping the sector. So that's an overall data perspective, but then I'm sure there's more peeling the onion.
I'm sorry. Thank you, Mr. Chaji. See, let's cut to the chase and sort of make it much more understandable, because whenever someone says the two-sector model, both the sectors should, pop up into your head. Normally, we are used to using so many sobriquets and acronyms and other things. Largely, the context of those words tend to get missing. For example, we keep saying that underprivileged, but perhaps I've also been writing about this, that perhaps the better word would be access deprived. Because in this world, the situation, the poverty, 25 years ago, the kind of poverty and the quality of poverty has undergone a sea change. I mean, if you look at IMF data, you will find that people don't die of famine these days unless famine is man-created. It's not my word, 1921-22 survey, IMF says that. So if we structure this panel's discussion and keep to our time limit, let's say that it starts with the basic idea, as Mr. Chandrasekhar Ghosh started out by saying in the first session, the basic concept of microfinance. Microfinance is an enabler, is a provider of resources to the most enterprising segment of the society. That is how the access denied people are defined. We love to say that they are the most entrepreneurial, and also the question that microfinance has been around with us for a very long period of time. The resources that they are giving to the beneficiaries, are the beneficiaries putting them to a good use so that the real asset creation is taking place. I presume the primary role of guardrails would be to look into that. More efficient deployment of resources wherein the efficiency is defined by putting the resources into the uses that it's meant to be. So I will turn to Mr. Chandrasekhar Ghosh on this, on his reflections, that whether the assets are being created, whether your fellow lenders are ensuring that assets are being created and they are not being put into consumption expenditure, and also if it is, then how to sort of, I would use optimize here, not minimize, to optimize the usage of resources that you are putting into their pockets.
Thank you, Dada. I already mentioned this point earlier in my speech. But what I feel that when I would be like to lend any of the customer, I should be understand the customer need, what customer are like to do, and accordingly we are going to funding to them. And that will be help to the customer to success, and it will be also become a success of me. If we put my business on customer's shoulder and pushed it my disbursement increase, then it will become as a disaster which we are facing now. If you see that the industry are going such a way on that, and Aditya also mentioned about it. 2010, there is a Malagam committee have been decided and talked with all of us and decided on that we cannot be lend two lenders to the one borrower. Suddenly it has been withdrawn and we face these challenges, and immediately multiple lending have been increased and sector are immediately like to face these challenges. So I feel that what we learn from the field, accordingly we like to practice, and regulator also expected will be practice on that way because we are mature. But when we are also not like to look in that line, automatically this type of disaster has come. So my feeling is that the guardrail will be helped us again to revive from that. But again my point on that, the will be look is our customer as a entrepreneur, and we are supporting them to build up a enterprise which it will be help them to survive in a long run, and they also can be come out from the poverty, and they also create the new employment on that. So if we are missing in this line of the objective of real as a microcredit, then we'll be like to not can be stopped this type of problem. Compliance, guardrail can be like to make in a one time to solve us, but we do not know that what future is coming for us for another challenges. Data is given the help to us to take the decision, but data cannot be only decide on it. What is the difference between the microcredit and consumer loan or personal loan. There is an only difference is there. Microcredit is helping to the entrepreneur to running a business or start a business or scale a business. A personal loan, there is no tracking on that, anywhere they can use on that. So we should not be convert again with the other situation, data and everything, converted microcredit as a personal loan. So this is my point on that, it will be like to make. Next point, Dada, is there. When we started microcredit, that time people are not understand the microcredit. We are, yeah, no, I said that, I'm coming on that. The ground level people are not know that. In the group meeting, weekly installment, how to repay, they are not know anything. We only given this education and they are coming out. So this is the challenge, whatever you mentioned about it, they majorly know about it. No, but it is not known by the top level, and that is the problem. Now we are deciding the policy from the top level without going to the field, without going not to related to the field. If I say that any policy prepared for the country on the basis of ground reality and incident, it's not like that policy prepare and then they will go. So we like to see that whatever we are practicing, when the policy is changed by the government or regulator or we are as a leader, we should go to the field. We should understand about the field because it's a very new industry. No, if you see that is my side on that as a microcredit, I have not reduced my minimum 2 days as a CEO, as a bank MD. I have been not reduced monthly less than 2 times to the field visit. I'm compulsorily visit the field in the 2 times in a month. Just to understand about the customer, understand about the staff and what is happening on that. And accordingly, I like to revise on that. I hope that can be it can be learned from the last crisis, multiple lending, higher interest rate. It can be the guardrail and compliance will be like to help us to more strengthen the ground and the growth of this industry in future. Thank you.
Thank you, Mr. Ghosh. I mean, I still remember not before the Andhra Pradesh crisis, did the general newspapers started covering in whatever way the segment called microfinance. Most of the people even now are unaware of the fact unless the crisis hits. In fact, last 4 headlines that we had on microfinance were about disasters within organizations. And stress factor is being talked about, but just as a passing remark, I'm just leaving it with you as a very senior journalist who is retired and write columns for various newspapers across the world. I'll just say that think about going to the public more with relevant data, like Mr. Ghosh knows how to sort of approach and what kind of facts that newspapers will accept. So I think you should have some more general awareness kind of a thing with the kind of people that he talked about, the upper strata. If I may take the pleasure of calling ourselves upper strata, but I will come to you, Mr. Malan. Forget about what guardrails are there. Forget about what you had done. My first question is that, is it good for any industry without getting into the mode of a continuous introspection and riding from crisis to crisis? As you know very well, had it not been for the Andhra Pradesh incident, we wouldn't have talked about NBFCs and what kind of an organization should a microfinance company be based on. So what is your take on one, which can be a binary yes or no, that whether should any industry for that matter, right from crisis to crisis towards development, or there should be a continuous process of introspection so that the quality, I'm not talking about guardrails because it's too big a word to mouth even, continuous introspection and quality improvement. How do you ensure this together?
Thank you. In fact, I don't know how many such industries are there which is regularly facing some crisis some crisis or other on a regular basis. But yes, microfinance had faced several such crises in the last 25 years of its journey. If you see the first set of crises started somewhere in the 2007, 2006, 2007 when some kind of troubles we've surfaced in some of the districts in Andhra Pradesh, like Kurnool, then Kolar in Karnataka. That was the first instance of some kind of a trouble as far as microfinance is concerned. Subsequent to that, we saw a larger one in the form of an Andhra crisis, and where Andhra government came in and put some restrictions and came up with their own. And then, which, as rightly said by Suparnada, it led into a RBI intervention in the form of a regulatory structure, regulatory framework. So that regulatory framework, and then subsequently there were crisis after crisis in the sense in the form of, I won't say crisis, I will not call it as a crisis, but troubles were there. Some kind of troubles have been happening on and off. And once in a while it's good also to have such kind of troubles, because it's time we can also take a introspection and see what went wrong, what was good, and how do we make things better. And for your information, if you see a microfinance sector, after every such trouble, we have improved our systems and processes. After Andhra Pradesh, it was realized that the need for a credit bureau mechanism in the country. Although credit bureau started somewhere in 2007, 6 or 7, but we never had a credit bureau as far as microfinance is concerned. And microfinance was the one which immediately after the Andhra crisis started a credit bureau in the form of, I think 2011 or so, the CRIF Highmark was the first the credit bureau which came into being. Now Equifax is a major player, and other credit bureaus are there. So that was one thing. Secondly, that another trouble was when Dhono happened. When Dhono happened, till then the entire process was in the form of cash dispersal, cash collections. That was what the microfinance sector used to do. But the moment we found that the cash has a problem, and Dhono has shown us that if the cash is withdrawn, it can lead to a trouble. So the entire industry moved into digital. Of course, the environment also, ecosystem was also conducive because the JAM treaty was in place at that time. So because of that, the entire disbursement started in the form of digitized through banking system. Collections were not given much importance that time, but then at least disbursements were done in that way. But when COVID happened, it moved into the digital collections. I'm saying that these kind of troubles are, in a way it's good, but not that it should happen frequently, but then in a way it's good that it can give us some kind of introspection and try to improve the systems and processes, which have happened as far as microfinance is concerned. Here, the guardrails which we talking about is something slightly different, because in 2012, as Dorsa said, when the regulatory framework came, RBI laid out some kind of a principles, some kind of a strictures that what should be done, what should not be done, where they said that how many lenders should be there for a rollover. But in 2022, when the framework, when the regulatory framework was revised, when new regulatory framework came in being, then RBI made a lot of relaxation, including the number of lenders part was removed, which actually I would say which opened a Pandora's box, and everybody tried to take advantage of that. Even if somebody wants to be a first or second lender only, but then there were other players who wanted to be cash on, and they became third, fourth, fifth. And in the process, we have seen several lenders coming in for a single pour over. As Aditya talked about, because in 2024, the number of lenders with more than 3 or more institutions were as high as something like 7 or 8%. But today it is less than 3%, I believe. So that is a time when the SROs came into being and put some guardrails around that, saying that RBI has relaxed it, well and good, but we should have our own norms that we should not go beyond a particular level. So we put a stricture that let there not be more than 3 lenders for a borrower, because if it is more than 3 lenders, it can cause a kind of a trouble as far as recovery is concerned. So let's not go beyond that. Similarly, there was no stricture as far as the overall exposure, although RBI had an overall guidelines that not more than 50% of the monthly income should be in the form of a repayment obligation. That was the only thing. But we put a guideline saying that let's not have more than 2 lakh exposure for a household under microfinance or a unsecured loan. So that kind of and of course we also gave a couple of other instructions. So this was something which came from the industry itself. I will say that SRO is basically part of the industry only. And this was decided in the meeting of the CEOs of the MFIs. So it was an occasion for us to look back and see what went wrong and what was missing, and we ourselves took corrective measures. That was in the form of guardrails. And that guardrails have really helped in bringing back some kind of normalcy to the system. And now today you find less number of lenders for a borrower. You can see as Aditya gave that data in the earlier. So that is what happened. So I feel that once in a while prices are also, as it says, dark challenge. So it is once in a while it's good also.
That's good. I mean, but what would be your reaction, Mr. Ghosh, to all this? I mean, you are a practicing microfinance lender. So, what do you think of the industry right now? Be clear, absolutely open, because this audience sort of expects something from you and take back true learning, as they say.
I mean, there are huge stalwarts here, so I mean, okay, you want me to be open, I'll be as open as I can, depending on the size of my business. Now, I think it's really good that we have the guardrails, and it is very important that we have the guardrails, and to be candid, the borrowers need it. I mean, the borrowers probably don't even know what the guardrails are all about. But they need it, and we need it more actually. The lenders need it a bit more, because we have not been able to restrict ourselves from doing certain things which should not have been done. So, between the period when the first sort of guardrails came out in the Maligram committee, we could call them guardrails as such, till the time COVID came in, I think that particular period was excellent, where recovery rates were always around 99%. Nobody was getting into an over-leveraged position and people were growing, but not at a fast clip that we wanted to grow at, probably post, infusion of a lot of capital coming into post-22 when RBI came out with its relaxed regulations. That relaxed regulations basically relaxed that particular ingredient or component which created the hassle for everybody. Right? Now the borrowers don't understand, we have to understand. Now we couldn't understand. For 10 years something worked for us, we want to go back there for some time. And I think it's very important for all of us to slow down a bit and see where it's headed. The borrowers are pretty happy. Today if you look at, the only issue with the guardrails is probably it doesn't really address the requirements of a first-time borrower, a new-to-credit borrower. Okay, it assumes that there's somebody who's already borrowed, and there are many entities in various sort of partnerships, whether BC, co-lending, etc., where we are sort of trying to put restrictions through scores, right, exposures, but not much is being talked about on the first-time borrower side, which is the important part which Ghosh was trying to talk about, that we are going to build entrepreneurs. There is really no process of doing that. I would say that that's a subject of availability of funds also, because right now if the funds are slightly hard to come by, then that gets distributed amongst people who are more eligible, right? And those are the borrowers who have performed better, right? So that's where it's going. Probably the ticket sizes are therefore increasing because of that. However, what we are not being able to address and build up is that the new wave of people who have joined the sector, who have reached the age of borrowing, who do not have a formal credit record,
those are the people which need to be addressed. I think that's a huge miss, and we have to really work hard on that. And for that, funding is critical. So, and to be honest, I mean, if I could just digress a bit on the power side and talk about a bit on that, I would say that it has been mentioned before. I think MFIN has mentioned, Sa-Dhan has mentioned in various forums that what we are looking at is a nice percentage right now, which might start getting worsening. I mean, start towards getting worsening because the denominator effect is going to have its play very soon. And if that happens, then the percentages which banks rely on will not look nice. And then there will be another cycle coming in saying that, oh, your power is increased and therefore we cannot give. And, it's a vicious cycle thereafter. And then you actually end up killing a lot of stuff. So, which is not good. So this was as candid as I could get, sir. I hope it works right now.
So I have been hearing that, no fund. India didn't have fund, corporates didn't have fund, resources are limited. Resources, of course, would stay limited unless, of course, the Star Trek days come in wherein people don't have to pay. They can just go and order food from the recycler. So, but what is your take on what you talked about the reality, the resource limitation? So what do you think? I mean, how much can you sort of increase your support to the sector?
Sir, thank you, sir. As far as resources is concerned, I can say the banks are eager to get the MFIs. But banks are highly regulated with compared to NBFC, particularly to MFI. So when we are lending from the banking side, we have to go through the RBI guidelines. And based on that, we frame the policy for MFI. So first of important part is that we always see how much lending we can do the MFI to the maximum extent, because the all lending falls under the agriculture, and it helps the public sector banks, private sector banks to achieve the agriculture target under private sector. So it is a most important or first area for lending to MFIs. But the constraints what the banks are facing, the quality of balance sheet the MFI is having. So if the quality is not good, if the NPA percentage is crossing a particular threshold limit, then banks have the worry and their policy does not permit as particularly. Some of the MFIs which are really working excellent, I do not want to take the name. I think bankers are there to lend and they are standing in the queue and they are saying that we don't need much fund for that. On the other side, when the balance sheet of the microfinance institution is weak, I think the bankers are hesitating to lend the MFI. So this is based on the quality. The banks are ready to finance. Banks are always not only financing to the own lending, but also we are purchasing the portfolio from the MFI where the quality of lending is good. Because this is again risk sharing basis, so portfolio purchasing is another tool. Then co-lending, we are also coming with many NBFC. And our policy permit also to, for co-lending with the MFI also. If the MFI is sourcing the good quality of leads, so the bank, we are financing with a percentage ratio, say 80% by the bank and 20% by the MFI, and the risk is sharing to that extent. The resources from bank side, sir, I think there is not a constraint. Only the capability of the MFI may be the issue, sir. Other part, the banks are what are doing, they are lending to MFI directly also. If you see the figures in West Bengal, sir, the figure of MFI lending is around 34,000 crore plus. But when we see the lending by the banks through only the self-help group, is 12.5 lakh groups. That means it is almost 125 lakh women entrepreneurs having the credit outstanding more than 30,000 crore in the state. So the scope is unlimited, and the resources to the bottom of the pyramid is required for the growth and economic development of the state and the nation. So equally, banks are finance. If we are not in a position to lend the MFIs, then we are lending directly to the borrowers of this sector. If we see the Mudra loan, this is another kind of MFI loan. In the entire country, we have around 33 lakh crore Mudra loans to the 55 crore borrowers. So banks have the plenty of resources to lend to MFI sector itself, either through the MFI institution or directly to the borrowers. Thank you.
On that, I have taken note of one comment that you had made, that banks are highly regulated compared to NBFCs. On that, I will come back to you, Mr. Maman. But I think Mr. Ghosh has a question for you in jest, more in jest, but that's a very important question that he has. Yes, Mr. Ghosh.
Sir, yes. I mean, I just had a question on behalf of small MFI, I would like to talk on it. So, the couple of challenges which we face when we look at the business is that the business of borrowing from banks, is that the rating is a very important criteria which you put. And so that is really steep. I think you currently have a level of A. Okay, so I don't know too many MFIs which actually qualify in that. One. Two is that when you even give a loan, you also take a collateral, which is much more than possibly the amount of NPA which you could expect to be hit by. So then what is exactly the worry which you foresee which is stopping you from lending?
Sir, if I tell you, sir, the banking sector, sir,
I'll rephrase. Okay, element of worry. So what is the element of worry then?
Sir, it's because I'm from the PNB, and this is the second biggest lender in the public sector banks after State Bank of India. We have around 1,50,000 crore book lending to the NBFC and MFI. And you are rightly told, sir, the rating, minimum rating for lending is A+, A and above. So that is based on the risk management committee of the bank, that is on the guidelines and the compliances of the Reserve Bank of India, and the internal learning, because now these days RBI is coming with the risk-based capital structure for the banks also. So for the entire structure, you are correct, sir, but this is the limitation for them.
Mr. Sibu, shall I call you Mr. Sibu? Yeah. Mr.
If possible, Saibu.
Saibu. Yes, I stand corrected, but that's the kind of regional difference brings to the table when it comes to the pronunciation. I stand corrected, Mr. Saibu. Mr. Saibu, you are the national head of inclusive banking of a small finance bank, which is a relatively new category that we have come to deal with. Now, as the head of the inclusive banking, inclusion is a word that everybody plays with. I mean, starting from RBI down to financial reporters like my colleagues who was sitting there, and there's the greatest bashing point around. I mean, be that the finance minister, when it comes to us, we do that. So, what has been your experience with this sector?
Yeah. So, first of all, thanks to AMFI and appreciate AMFI, and of course I am privileged to be here. Of course I am really fortunate because, sir, as you mentioned, of course, under the inclusive banking, again, so I was just thinking, we are raising a lot of questions here and there. Of course, whether it's asset creation or whether it's a consumption, whatever maybe. But when we talk about the inclusion, of course, microfinance, we should think in that way as a as part of the inclusion. Of course, some part may be the asset creation, some part may be the consumption. Of course, I am here, to this sector for last 25 years, being involved. So, I'm again in West Bengal, of course, for me, if I think, so we are doing the direct, we are having direct channel and the partnership channel also. So, in inclusion, what I think, of course, the guardrail is there. So, now I think, always when we talk about the guardrail, again when we talk about all the practices, of course we talk about the trust and the protection. So of course the MFI customer is the final, the end portion of the inclusion, no doubt. But in my view, always we take care the institutional inclusion also. So that concept, that way also we come to the concept. Okay, so. For example, for last 4 years, we in this market, the West Bengal market. Okay, so I am very proud to be here in West Bengal market. So in terms of my institution and personally also. So we are having around 10 partners here in the BC model. Okay, so we as a ISA Small Finance Bank, when we done the transition to the bank in 2017. We moved to 100% BC model, then our own model. So it's having its own benefit when we talk about all these multiple lender and all these things. See, what we believe, if we work through the partnership, of course, inclusion will happen, both the side, the customer side and the institution side. Of course, we can avoid the multiple lending to some extent. So that's a lot of benefits there. So in my view, of course, inclusion should happen very simply. Inclusion should happen not only the trust and the protection in terms of the ultimate customer, the MFI borrower. So in terms of the institutional borrower also, the lender borrower. Of course, MFI also a borrower in one side. So it should happen. So institutional building. Okay, so I always talk about my friends. So I'm more passionate of institutional building. So then only, of course, some sort of solution will happen. So when we discuss about, when we practice about the guardrail, of course, if the self-discipline is there, the institution will practice something, that is one side. But if the institution is not built properly, then ultimately the arm is getting spoiled. We need the arm, we need enabler. So MFI is always enabler. Of course, one side I was a MFI, so then moved to the banking. But still we believe in the sector as a practitioner and the lender board. So that's why we are having the mixed model. So we believe in the inclusion, just not for the sake of name, but in the model what we have evolved. So we are having the direct channel one side. That is very recently, 1.5 years back only, we started as part of proving to the market, when the market is having a lot of up and downs. Okay, so as part of that one, but of course, we were very well success in that. Of course, the BC model is there, that is one thing. Another one is the agency banking model, that is also there. So that way, multiple model in single umbrella, we work for the inclusion and through the digital aspect. So that we believe in inclusion very strongly from the foundation there itself. That's our founder or mission.
Thank you, Mr. Saibu. I will go to Navarno, sir. Yes. So I remember when I first met way back, decades back,
Chandrasekhar. So Chandrasekhar used to, please don't mind, I call him Chandrasekhar because he calls me Dada, and of course by age I am senior to him. So Chandrasekhar, at that point of time, he was not such a revered person as he is now, of course, as the guy who set up Bandhan Bank, a private sector bank after a long time. He rose almost from the ashes. So he used to sort of recount those stories about, sitting outside the local NABARD chief's office for hours together to convince him that he was worthy of winning loans from them so that he could sort of take it down to the beneficiaries. So having said that, NABARD now has many collaborators in terms of sharing resources, I would put it that way, sitting at this table. What do you think is largely what are the things that microfinance companies, this industry, could do to improve its performance in terms of compliance, because you are one of the major lenders to them.
Thank you, sir. First of all, microfinance is a, what they say, we are financing the not so creditworthy, but I would say those people who are financing the lower strata people, their requirements we are meeting, they are the most creditworthy. And from NABARD, for the last 4 decades, because NABARD has 3 roles in this sector, I would say. First is capacity building. What we are talking about guardrails, I would say that those guardrails are developed through capacity building and awareness programs done by NABARD for the last 4 decades. And I would proudly say Mamen sir is the pioneer in this field on NABARD. And in this capacity building and guardrail, I would say, I would request actually rather, all the players, microfinance institutions, the person we are leaning on should be strong enough, should be stronger than us. If I am leaning on someone, that someone should be more stronger. What I mean to say is, we are dependent on the micro borrower. So that micro borrower should be strong. How he or she should be strong? Through awareness or through education or through some capacity building or skill development, I would say. When we are trying to finance someone, some lady or 4 or 5 ladies through JLG model, so can we give them some kind of training or capacity building before financing them, the enterprise which they are going to take up? Because unless until they will be used to fully utilize our credit, they will not be able to repay our credit. So that I would request all the players. And as you know, sir, NABARD has been very much concerned about this thing itself, and that's why we have, from the very beginning, we are conducting many programs for the rural women, for taking up many skill and livelihood programs. So these programs, our livelihood programs, will enable the microfinance institutions and also the other players like bankers to finance these members, means borrowers, ladies in the village level, rural area. So from NABARD perspective, sir, I would say this capacity building or promotional activity, the developmental activity is going on from the last 4 decades. But as you said, Ghosh sir's example, you said rightly, this NABARD's refinance activities are very gradual process. It is a very nascent stage, I will say, because we started mostly with the NBFCs, bigger NBFCs actually, not with MFIs. Then this is also in the last 10-15 years, not more than that. So the things are changing, and I would request the honest assessment of the borrower is required, which is the most important guardrail, I would say. And one more thing, what in the usual banking terminology we used to say in KCC, adequate credit. So in here also, if we assess correctly and what kind of activities the entrepreneur is going to take up, so adequate credit if we can give her, so she will not be forced to go to another lender or multiple lender kind of things will not come, I think. So that we have to see. Of course, there will be some issues of credit exposure, I understand, of the means smallest of the MFIs may not be able to cater to those needs. Still, we have to see that as for our assessment and their requirement, that should match somewhere. Some common point as a lender and as a borrower we have to find, so that that amount or quantum of finance we are giving should be the adequate one, so that if we are financing that, she should not be misusing it. The purpose for which we are giving, she should be able to invest that. That is the most important thing.
On that note, I will come back to Mr. Maman. I think Mr. Goswil Singh made a very important comment, which said that banks are highly regulated compared to NBFCs, and that would be the last question anyway. So, since it's about guardrails, and you come in with this, last word in the session. So,
thank you. In fact, I don't think NBFCs are less regulated. They are regulated by Reserve Bank of India only, central bank only. The regulations, whatever laid down by the central bank, is what the NBFCs are to follow. And nowadays, there is a scale-based regulation which has been made applicable to the NBFCs, under which that base layer, the middle layer, and the top layer, those kind of different 3-4 categories of layering is done, and according to the size of the institution, the intensity of the regulation is also made larger. In case of microfinance institutions, around 96 institutions in India we have are NBFC MFIs, that is regulated directly by Reserve Bank of India. And they contribute almost, I would say, around 94, 95% or 96% of the total portfolio. Only 2-3% of the portfolio is only by non-NBFC MFI, like maybe a Section 8 company or a cooperative or a society. But 97% of the portfolio is done by the NBFCs MFI, who are regulated by Reserve Bank of India. And not only that, in microfinance is the only sector probably you have, now of course you have some other sectors are also having SROs. Otherwise, we were last 10 years, microfinance institutions, apart from the direct regulation by the Reserve Bank of India, there used to be the regulation, quasi-regulation of the SROs also. And we have 2 SROs for that matter. So many of the MFIs come under the regulatory watch of 2 SROs and then the RBI. So I don't think that NBFC MFIs are less regulated. Whatever the regulations which are prescribed by the Reserve Bank of India, they are being followed, and that is quite heavy as far as that institutions are concerned, because many times you say compliance cost is the highest. That's number one. Number two, I just have a request to Balbir Singh sir, they have saying that their norms say that A and A-rated MFIs are only to be financed by the banks. You don't have many A-rated MFIs in the country, because what I remember is that around 17 NBFC MFIs are only A-rated. The remaining are AAA rated, triple B rated, or double B rated. Larger is triple B rated. And triple B rating is also investment grade. It's an investment grade. So you can definitely look at triple B rated MFIs for the purpose of lending by the banks. And it used to be like that. And only because of certain stress in the sector, many of them made it little more tighter. Otherwise, the banks used to lend, especially I know State Bank of India, they used to even lend for double B rated MFIs also. But I would request that more than the rating, there is a grading which is happening in the microfinance sector. Grading done by the rating agencies, on which they give a credit grading. On that grading, you can have MFR 1, 2, 3, 4, 5, up to 8. There are grading is there. Many of the lenders take up to 4 or 5 for the purpose of taking lending, and that is more a comprehensive one, because otherwise, NBFC being smaller in size, getting A rating is very difficult, because many a times the rating agency also goes by the size of the institution, the parentage of institution. Suppose a larger corporate now start an MFI, probably they get a higher rating because of the parentage. But the new MFI which has been formed without any corporate parentage or anything, for them it's very difficult to get a higher rating. So kindly look at grading as also a norm for financing, and financing is very much required. Unless the finance comes, the sector cannot revive. And as Ghoshda said, this Ghosh, that your denominator factor will come into the play. Thank you.
I am now giving the mic to the audience. A few questions, perhaps not more than 2 or 3, because we hardly have time. Lunch time, I guess, is running away from us. So, any question from the audience? Shall I count 10? Oh, yeah. Progananda Chaudhary. Mike, যাচ্ছে আপনার।
Do you think the rate of interest that the microfinance normally charges is to some extent or to becomes such a difficult for the borrowers, the total sum that including the interest is the total sum that stands. So do you think that that is one of the major impediments for non-repayment?
No, sir, definitely no. Because, see, we did a study with IFMR research. Sorry, IFMR research. We did a study last year, and we found what are the challenges the borrowers are facing, and very few people, less than 10% of the people only counted interest as one of their issue. Why I'm saying is that it's more than the interest, getting the money at the right time is more important. If they are not getting this money from this MFI at say 24 or 23%, what is their next option? Banks, if they give, well and good. If they can get money from the banks, well and good, they can get a lesser rate of interest. But those people who cannot get a loan from the banking system is the one who comes to the MFI. If they don't get it from MFI, the next option is go for a money lender only, which can charge anything beyond any number. And let me also tell that how these interest rates are calculated. See, it is by taking into account of the 4 constituents like cost of funds, the operational cost, the risk cost, and the margin. In average borrowing cost for the MFIs is 11 point something, almost 12%, 11.97% or something like that. So this 12% I would say. 12% is the average, industry average of the borrowing cost of the MFIs. Operational cost works out to something like 6 to 7% because it's a feet on street model. The person from the MFI goes to the field, mobilize the application, take the application, do the collection. Everything is done by the person. The borrower do not have to come to the bank or branch. Third is that the risk cost. Now with the higher delinquency rate, the risk cost has become higher. It's 2 to 3% risk cost is now there. Earlier it used to be less than 1%. And then the margin. What is a margin? For a growth margin required for an institution, anything more than 2 to 3%. So if you calculate all these things, 23% or 24% is not a higher rate of interest at all. It is just required for the purpose of serving the interest of the borrowers. And I'm again reiterating that interest rate is never been an issue as far as the borrower is concerned. It has been always an issue for maybe the political bosses or political deliberations are concerned.
My another question is this. Since you say
this would be the last question from you because I'll have to restrict
this is my last question. Since you said that your borrowing cost is 12%, because whatever loan that you obtain from the banks, you have to take, or financial institutions, you have to pay 12%. It is high and very much on the higher side. But the microfinance is considered as a sector to play a major role in financial inclusion, which is the target of the central government. Have you made any representation to the government to bring down the cost of borrowing cost, because it's so that they can give you loan at a lesser rate of interest? Have you made any representation to the government?
Yes, sir. Yes, definitely. In fact, a couple of months back, we had a meeting with the Honorable Finance Minister, Nirmala Sitharamanji. There was a NBFC symposium organized by the DFS Ministry, Department of Financial Sector, Ministry of Finance. And she was there and for addressing the gathering. Apart from that, she also had a closed door meeting with some of us. A few of the selected, both SROs as well as some selected MFIs, and were called for a closed door meeting. We are being very clearly said. More than that, we had been writing very regularly. Recently also, we have sent a letter for the next budget, when the budget preparation is happening. We have requested for a dedicated funding or a credit guarantee mechanism so that the funding can come from the banking system easily. This 12% which I said, it's an average. I have seen MFI paying up to 18% to NBFCs. Because for borrowing money, they have to borrow from somewhere. If the banks are not giving, they borrow from a bigger NBFCs. I have seen NBFC borrowing at 18%. I have seen a bank charging 13% to NBFC MFI. So it's an average is 12%, but it's not borrowing is always a costly effect. That's why I said there is no other mechanism in India, whereas in many countries there is a provision for mobilizing savings from the members, which is not allowed here. So you have to necessarily depend on the borrowed money, and borrowed money is costly money. We have been taking up, and we are taking up with the government.
Any more questions? Yes. Last question anyway. Anyway, okay, all right, two.
Hi, my name is Rahul Jowhari from Microfinance, and I'm a part of the small and mid-sized kind of MFIs. I'm a practitioner. While the guardrails have a positive impact for the long-term benefit of the sector, the small and mid-sized MFIs have taken a very severe hit. Approval rates have declined dramatically. So, what we saw today, not even 25 to 30% goes through. It's had a huge impact on our revenues. Any kind of capital, whether it's debt or equity, is also drying up, especially for mid and small-sized MFIs. Can you share some thoughts around, in the short to medium term, are there any correctional measures which are being taken to at least support the cause of small and mid-sized MFIs?
Myself, Ranjan Bari from Uyghur Financial Services Private Limited. Actually, we are very small level players in the field, and our main source of fund is the bank loan. So my question to Balbir Singh sir, that as you have said in your speech that only AA-rated companies are given fund from your bank. In the previous, we got fund from many banks, many PSU banks. We were unrated that time. Now our rating is very lower level. So we have paid our dues in time to all banks. But nowadays you are telling, not you, all PSU banks are telling like your words that only AA-rated company will be financed. So is this the, your strategy that only the big companies who have AA rate or more than that, they will get fund, and smaller companies like ours will not get fund from banks? This is my question. Thank you, sir.
Thank you, sir. I think rating is not limited to the size of the company, it is on the quality of company. So that is the answer, sir. The rating is depend on the quality of company, not based on the size of company.
I have talked to the rating agencies. They say that below a particular level they can't give. That is the norm of the rating institutions. Okay. Coming to your question, sir, I know that there is some challenge for the smaller institutions, not only smaller institutions, for all MFIs, and now the rejection rates are gone up because of the three lender need. But it was required as far as for the sustenance of the sector is concerned. My only request is that if you can move to a newer geography, to a newer area where you can have some more new to credit borrowers, I think that is the way you can expand your. Otherwise, if you are remaining in the same geography, this would be a problem, and this is a challenge. So till the time we take a review, we will be taking a review of the guardrails again, maybe sometime in the month of March, where all the MFI leaders would be called for, and we will be taking a review on that. Till that time, I believe that this should be there. And we also got a feedback for your information. We did a Google survey with the MFIs, and we asked whether any changes to be made in the guardrails. And none of them said it has to be done, but they highlighted some of the challenges like this, but none of them said that it should be changed, and many said it should be continued.
I think many others have questions, so can we sort of continue this discussion in the lunch session? And let's call this session formally, bring this session formally to a close. Thank you very much for listening to us so patiently, and thank you very much.
Thank you to our esteemed moderator and members of the panel for a truly substantive and thought-provoking discussion. I also take this opportunity to, highlight all the delegates who have come to attend this session from the banking fraternity, especially members from SBI, Bank of India, Bank of Maharashtra, Punjab and Sindh Bank, PNB, and many other significant PSU banks who are here today to attend the event. We will now break for lunch, but before that, I will call upon Mr. Shubroto Ghosh, Board Member AMFI-WB and Managing Director of Servitium, to kindly felicitate our eminent panelists.